UPS, in our view, is and has been doing the things to kind of restructure its network to deal with the realities of their business and how much it's changed over the last couple of years. And they're also focusing a lot more on revenue quality. So that would mean trying to win more share of small to mid-size shippers. Also, you noted they're kind of gliding down, if you will, their exposure to Amazon, to some of their businesses. That just doesn't make sense. I mean, they're still going to do returns for Amazon, which is a good business for UPS from a margin financial standpoint.
Hey, Lee, what kind of visibility does UPS have on their revenue stream? Like, how much is contracted versus how much is just me walking up to a store and, shipping a package across the country?
That's a great question, Paul. I think the reality is that they have somewhat a decent visibility into their business a couple weeks out. I think that's really about it. That's just really because it's their customers are really driven by economic activity, and it's really tough to kind of really gauge those volumes, especially in the current environment, given the uncertainty driven by tariffs, which is why earnings expectations for the second quarter will probably start moving lower as sell-side analysts adjust their models.
But in theory, if we put aside the macro for a second, I appreciate you said 2/3 of it is macro. But the Amazon stuff is a good thing for them long term, right? Even though there's near-term pain, like those are lower margin packages that they don't want to do anymore. They're going to focus on higher margin packages that could wind up being much more stable and profitable, right?
Yeah, and I actually, said 95%. So I was a little more focused on, us thinking that the majority of the shortfall in the 2Q is really the macro. But yeah, to your point, they're really focusing on revenue quality. They mentioned on the call that some of their business out of Amazon's fulfillment centers just really wasn't profitable for them. So it obviously doesn't make sense to take that business. And if they're able to create capacity by getting rid of some of this business and filling it with what they call SMB, small to mid-sized businesses, that's just going to be a good thing for its margins overall, and it'll allow them to generate the kind of returns that they can reinvest in their network. Because while they're doing a lot of investing in automation, and they're closing some facilities just to be a little more nimble than they were in the past, they're still going to continue to have to make those investments because technology continues to change, and those benefits will need to be driven by those investments.
Lee, a lot of companies are saying, they're not necessarily seeing the impacts of tariffs now, but they certainly expect to in the coming weeks and months. You cover everything in shipping: rails, trucks, the ocean shippers, the air freight guys. You cover it all. Are you seeing it now? Because I've actually seen some reporting over the weekend that maybe fewer ships are sailing from China to the U.S. Are you seeing it anywhere in your space?
Yeah, we are. And to your point, bookings from China to the U.S. are down 30 to 40%, depending on which press reports you read. Some of that is obviously there was a pull forward effect in our view before the tariffs were going into place, so people were rushing to get stuff out. So we don't know really where that's going to lie. Shippers are going to they're going to take the stance where they're going to sit back and wait to see what happens. Some are continue to do business as usual, and they're just going to try to push off the costs associated with tariffs to customers, which obviously will be inflationary, or a mix of the two. So really, it'll be interesting to see how things progress. And at the end of the day, we might wake up tomorrow morning, there's no tariffs, right? So who the heck knows?